We talked a little bit about the vision and how to get here, how we got here. Mark should talk about what's going forward. So everybody welcome Mark.
All right, that was a great intro. I'm glad only half the folks had made it back in by the time you went there. I'm going to sit down, I guess. I don't know. Maybe I'll stand. I don't have any slides today. I'm just going to talk off the top of my head, and so it may be a little less organized than usual. But we got a lot to cover. And what I thought I'd do is give an overview of where the economy is and where it's headed, and talk a little bit about Charlotte. It was real interesting to hear some of the reminiscence of, I never knew the story about Remont Road, and I know a lot about Charlotte, so it was nice to learn something new. I moved to Charlotte in 1993, and I came here to work at First Union. And at the time, I wasn't sure about Charlotte. I didn't know much about it when I came here. And when I went to interview with First Union, I thought it was a bank. I came from another bank. I worked at Barnett Bank down in Florida and was wanting to make a move. And when I came to meet with First Union, they told me that they were starting an investment bank. And I thought that was incredibly interesting because no bank that I was ever aware of had started an investment bank. And that really changed things in Charlotte. First Union and NCNB, it was still NCNB at that time, both started investment banks simultaneously. Erskine Bowles, who had probably the only investment bank in town at the time, used to joke and said that when he would tell somebody about that he was starting that he ran an investment bank, everybody would ask him for stock tips, which was not quite what they did. But at that time, Charlotte was a lot smaller. And I remember one of the first events I did in Charlotte was at the NCNB Tower, the Bank of America Tower. And it was sort of like this. It wasn't finished. It was an unfinished floor at the Bank of America Tower back in 1993. So it doesn't seem like it was that long ago in my perspective. Well, kind of to fast forward a little bit from well, not really fast forward, to tell you where Charlotte was in 1993. When I came to First Union, and Jerry Schmidt ran the investment bank, he said, Mark, what we'd really like to see is mentions in national media, because we've never had the First Union name mentioned in any national media. They were the sixth largest bank in the United States at that time, so they weren't a small bank. But the sixth largest bank in the United States had $36 billion in assets. So kind of a lot different. That's what inflation does, I guess. And I said, I think I can help with that. I had a lot of contacts. And the very first thing I did, and I focused a lot on regional economics and also the U.S. macro. So we had a weekly commentary and a monthly that talked about the local economy, not just in Charlotte, but throughout First Union's footprint. At that time, went from Maryland down to Florida, and about a third of the company was in Florida. And the very first report I wrote talked about manufacturing activity in this part of the country. And in 1993, 23% of Charlotte's workforce was in manufacturing. 4 of the top 10 employers were textile companies. And 23% of your workforce meant that Charlotte was, I think, among metropolitan areas, had the 4th largest share of its employment in manufacturing of any large metro area in the country. It was roughly the same as Youngstown, Ohio. Now, it is a metro area, and so in Gaston County, roughly 50% of the workforce was in manufacturing, and that still counted in Charlotte. But within Mecklenburg County, there were 1,000 factories. And today, there's about 850 factories in Mecklenburg County. So it's not as if they went away. There's just been some consolidation among that. That's kind of some of the change that happened. The other thing that is that South End really consisted of that one building. And I say South End consisted of that one building. It's a little brick building. It's an old mill that was being redone, and they kind of had an indoor flea market in it, and that was about it. About a year later, South End Brewery opened up on that site. And the whole idea was, hey, we're going to call it South End and see if anybody comes. And they did have the trolley barn, but they didn't have any trolley back then. And I say this because I'm gonna end up talking about where I see Charlotte coming and kind of some of the things that I've kind of helped along and worked on since I've been here. But before I do that, I'll talk a little bit because I gave you a long list of topics to talk about. It would take a long time to get through them, but some of them deal with the U.S. economy, interest rates, and what that means for real estate. So I'll talk to that real quick. In terms of the U.S. economy, things look pretty good. The U.S. economy has grown at about a 3% annual rate for the last 2 years. 3% is really good. I was in London about 2 months ago, early December, meeting with clients in London, and they were really perplexed. They said, how is it that you guys just had an election in the United States where you threw out the incumbent party, brought in a whole other set, so you had a change election, and you guys are growing 3%. Here in the UK, we're growing 0.5%. If we would grow 3%, we would build monuments to our leaders if we could get 3% growth. I mean, in their wildest dreams. Now, I didn't want to tell them, but there's not a chance in hell they're ever going to grow 3% in the UK again. Those days are over for Europe. But his point was accurate that we've had pretty good growth. But why do we have a change election? And I said, well, in the U.S., a lot of the strength has come about because of a lot of stimulus spending that we've had. Things like the Inflation Reduction Act, where we had a lot of investment in EV plants, the CHIPS Act. We've gotten a lot of that in North Carolina. Now, the Biden administration was pretty adamant about trying to put as much of that investment in swing states as possible. So a lot of it went into North Carolina, Georgia, and Ohio. So their disproportionate share of that investment went in those states. And I knew that right away because Richard Craver from the Winston-Salem Journal called me up and said, Mark, he goes, I'm looking at the polling data and it's not working. That strategy's not working. He said, I even interviewed people that are building the Toyota factory and they're going to vote for Trump. And I said, this is the problem with the strategy. I said, the EV investment, all that capital investment, it helps people. It helps the people that get the jobs that work on those factories. And it does further along some very important goals for the country. But the stimulus spending says it's all done with deficit dollars. So it puts us further in debt and expands the role of government at a time where the unemployment rate's relatively low. It feeds inflation, and inflation impacts everybody. And that was the driving force in the election, was inflation, particularly for necessities, things like food, housing, and transportation costs. Food costs are up 27% since prior to the pandemic. Housing costs are up 34% since before the pandemic. Transportation costs are up like 33% before the pandemic. And it's fallen disproportionately on the middle class, and really the middle class and below. And if you look at the University of Michigan's latest index of consumer sentiment, they break it out between folks who are in the lowest third of income, the middle third, and the upper third. And the folks in the lower third and middle third, their view on the economy today, which has rebounded a little bit in the last 3 months, but today is still lower than it was during the global financial crisis, at the worst of the global financial crisis, the worst recession that we've had in the post-World War II period. And so that's kind of telling. So even though we're growing 3%, there are a lot of challenges out there. One of the biggest challenges is housing affordability. I'm 62 years old. I can't believe I'm 62 years old. But housing has never been less affordable in the United States than it is today. Never in that 62-year period. And there's no quick answer to it. Now, one of the positives about that is that it's going to keep people in apartments longer, which is good because we've got a lot of apartments. It's you're not imagining things when you say, man, we've got a lot of apartments in Charlotte, because we have an existing stock of about 230,000 apartments in Charlotte. We've got about 21,500 under construction. That's 9.2% of the existing stock. There's only one city in the country that's building more than that. I believe that's South Florida. That's Miami, Fort Lauderdale, West Palm. They just call it South Florida, and I think Raleigh's like right after that. So it is. We're in Austin is up there too, and Austin's way overbuilt. But housing is very unaffordable. I don't really think there's any quick answers on that. It kind of the reason it's less affordable gets back to one of the themes of this meeting. It's technology, and that it used to be that in order to get affordable housing, development would just spread further out. It would go to the next county. So it would go further into Union County, Cabarrus County, Rowan, Iredell. And those counties are Stanley, Lincoln, I'm trying to think, Chester, which it's doing now. Chester County, South Carolina, going back to every census since the Civil War, has lost population in every census since the Civil War. The next census, they will actually gain population. But that trade going further out from the city has two things working against it. For one, the counties can't afford to subsidize the development, or I don't even like the term subsidize, but help as much with the upfront cost of development as they did in the past, because with online shopping, you don't get as much commercial development following the rooftops. So that means that residential developers have to pay more of the upfront cost. So it is more expensive to do do residential development further out in the suburbs. The second thing is, which doesn't get talked about, is this. Everybody has a smartphone. What smartphones enable us to do is that we're more aware of what's going on around us. And since we're more aware of what's going on around us, we want to be where there's more stuff going on. And that's why people are moving predominantly to cities that have lots of things going on. I like to refer to that as optionality. And you have a free option. The more things that are going on, the more options that you have. And that's something that's given to you free. And that's very valuable. And that's what, when I listened to the earlier presentations and was thinking about, the first thing that when you come to the workplace is your transportation in. And really, it's the options that you have on transportation. It's the optionality. The light rail is valuable even if you don't use it, because if the traffic gets really bad, then you might want to use it. It's an option. That option has value. So does the pathway that follows the light rail. All of those things. All of those things are encouraging development to come closer into the city. And there's only a handful of cities that are pulling it off just right. And the ones that are pulling it off just right are growing very, very rapidly. Well, I told you I was going to hop around a little bit. I think I got a little ahead of myself on the U.S. U.S. economy doing very well. Inflation is, the last 2 days, we've got some inflation numbers that came in a little bit stronger. At the start of the year, we always get revisions that go back the past year. Something that I had expected to see and that we saw in those numbers was that the progress at bringing inflation down was not as much as had been reported. And we saw with the revisions that inflation is proving to be a little bit more resilient. That's one of the reasons that bond yields went up yesterday, and people are beginning to think maybe the Fed's not going to cut rates 2 more times. Maybe they're just going to do 1 more time. I think it's too soon to make that call, and I'm keeping 2. Our forecast, I have to send it in tomorrow morning. Still going to have 2 rate cuts in there, but I'm not as firmly committed that they're going to get that second one in. I think conditions will change, and I think the inflation numbers. The one thing about the inflation data is it's moving in the right direction. It's just not moving in the right direction fast enough. And the Fed knows that. They said they don't expect to get to 2% inflation until 2027. That doesn't mean they can't cut rates until then. And rates are still relatively high. It just means they're not going to cut them that much. On the other side, though, long-term rates are likely to go higher. And we saw that the 10-year, after the CPI yesterday went to 465, it came down a little bit this morning. That's around 460. My sense is it's probably going to 520 next year. So housing affordability is not going to get a whole lot better because mortgage rates tend to be at least 180 basis points over the 10-year. Right now, they're about 260 over the 10-year. It's going to keep mortgage rates relatively high, somewhere in the 6.5% to 7% range over the next couple of years. It's also going to make the turn in commercial real estate a little bit tougher. COVID has done a number on commercial real estate. It really hurt the office market because people were slow to return back to the office. And right now, I think we are fully going back to the office to whatever fully is going to be. Work schedules will always be more flexible than they were prior to COVID, but I think for most people, going back to the office will be 4 days a week. It'll be somewhere between 4 and 5 days a week that people will be back in the office for most folks. But the office market is dealing with record high vacancies. And within the office market, Charlotte is a very interesting market to look at because the high vacancies are not spread universally. It's mainly older buildings where people are not really excited to go back to work. So in Charlotte, that is North Tryon. And this really struck me. I mean, one of my clients, one of our clients at the bank, and so a lot of clients are also really good friends, were the folks from Valentine, Smokey Bissell. And when Smokey sold to the Northwood Ravens folks, I was kind of, he brought me to the closing, and the closing was actually just in a conference room up on our trading floor. And we had the folks in from Northwood Raven, and we also had an attorney in there from Bank of America. And at the time, they were building Legacy Union, but we didn't know exactly, even though it was right next to our building, we could see it out the window. And I said, "What's going there?" And he goes, "I can tell you, but you can't tell anybody." And I was like, "What?" You know, it's like, and now I can because it's way back. He goes, "Bank of America is building a building there." And those of you who know anything about Charlotte, NCMB had everything north of Trade and Tryon, and so North Tryon, so north of Trade, and First Union, and then Wachovia had everything south. And so I said, "Why on earth?" I said, "They're going to do that. They're going to jump. They're going to come to our side of town." And he said, "Well, they have to because they can't get the young people to come to work uptown." And I'm like, "Going, it's only 4 blocks." I'm like, "It's only 4 blocks." I'm like, "What are you talking about?" And it's like, "No, we can't get the young people to come there. They all want to be on this side. They want to be able to go to Whole Foods. They all live in South End." And the odd thing is even though they live on the light rail, they walk on the path, and then walk down. They don't take the train in because it's a more direct route to walk, and so they just wind up walking. Again, getting back to the thing about options, but it just amazed me that that's happened, that we've seen that happen. And so we have this lesson of what's going on in the office market. Legacy Union has filled up fast, and it's filled up fast by a lot of companies like Robinson Bradshaw's moving to the newest building that's going up in Legacy Union. Robinson Bradshaw was an original tenant in what was a Bank of America building there at Trade and Tryon. They were one of the original tenants. I have the announcement of when they announced that they were leasing and they were going to be one of the original, other than Bank of America, in that building. And so we've seen all the law firms basically move from the square to Legacy Union. And this is the part of town that is doing incredibly well. So we can still see more office development. I don't think we're going to see a big race of office development this year, but we can still see more office development in this part of town, even though the part that's really struggling is the older buildings that are in the center of town. When you look at the other food groups in commercial real estate, apartments, nationally, the vacancy rate for apartments are around 8%. In Charlotte, it's around 12.5% because we've built a whole lot more. The good news on apartments is last year we absorbed the number of net leases that we grew last year, added last year was the largest ever. I think we leased about 13,000 apartments last year, but we delivered 15,000. So the vacancy rate went up. At 21,000 that's under construction, probably 14,000 of them will deliver this year. They're disproportionately all in the same product categories. A lot of them are 1 bedrooms, a lot of them are studios, Largest concentration is in the area that's lower south end. And so we've got a lot going on there. Apartments are going to have a tougher time this year. The good news for apartments is people are staying in apartments longer and they're renewing their leases, and the renewals are doing pretty well, but the new leases, there's a lot of discounting that's going on. The warehouse segment of the market, Charlotte's been very active. If you drive along the interstates, we've had a lot of warehouses deliver this year. It's been a tougher market there because we've been in a goods recession. Coming out of the recession, coming out of the pandemic, everybody was buying stuff. Lately, they really haven't been buying stuff. And so there hasn't been as much demand for industrial space. Industrial vacancies are about 6.5%. It's not super problematic. It's something that we'll work through. And then lastly, retail space. And retail space is in short supply because nobody's built any more retail space. And Henry Faison was right. I mean, the North Lake Mall was one of the last malls to be built. They probably shouldn't have built it. I mean, those of you that know anything about Charlotte, it's been a problematic mall. They've had some crime issues there, safety issues. It's sold for about 10% of its construction cost, and that's probably the bottom. I think it'll probably improve from that point. I mean, I would hope, but that's not a new issue. The vacancy rate for retail is like 3%. We're short of retail space because we haven't built a whole lot of it. Something unusual about this business cycle. We've never had a commercial real estate cycle. We've never gone through the down cycle in commercial real estate and not had a significant recession associated with it. Now, I got interested in economics in 1973 when we had one doozy of a recession. It was preceded by some inflation. That's why I got into economics. I was 10 years old, but I remember it very well. One of the things that I remember about that recession is that every bank in America except one was insolvent. Every single bank. The only bank that was not insolvent was Frost Bank in San Antonio, Texas. But every other one was insolvent. NCNB was within hours of shutting its doors. And what saved them, and I'm not sure if it was 73 or 74, but the 4th of July was on a Monday. And because the 4th of July was on a Monday, they weren't going to open until the 5th, and they had an office in London, which it's not a holiday in London. And they were able to raise capital in London, which is what kept them afloat and back in that period. It was a severe real estate recession. If you go back before that, the last real estate recession we had was in 1957. You go forward, it was 1989. The next one after that was 2005. When those periods, all those periods were the peak in the real estate market. The amazing thing to me, and I'm not a big believer in numbers for the heck of numbers, but precisely 16 years between those two. When did we see the peak sales value? Highest occupancy rates, highest rent growth? 2021, 16 years, almost to the penny. We've never gone through a real estate cycle and not had a severe recession that weighed on the financial sector. It looks like we're going to get through this one without that. And one of the reasons why is that coming out of the financial crisis, there wasn't a whole lot of appetite for risk. And so we didn't see as much development. We didn't see a whole lot of office construction. Since we didn't have a whole lot of office construction, we didn't have as large an overhang as we would have, and particularly of newer Class A space that's in most demand. So that's one thing that saved us there. We did have a lot of apartment construction though, but it looks like we're not going to have. It looks like we've moved past the trough of the commercial real estate cycle, which gets me to the last point that I'll say about the U.S., and then I'm gonna wrap it up and open up some questions. I believe that right now we're moving past what Larry Summers called the secular stagnation. The secular stagnation was just a fancy way of saying the economy was broken after the global financial crisis. Other economists might say, hey, we're finally moving out of the liquidity trap. because we went into the liquidity trap back in 2007 and 2008. And so we went through a very long period of time where the economy had a hard time growing faster than 2%. And I think we're past that now. A lot of that has to do with the appetite for risk, the appetite for risk for investors, the appetite or risk for lenders, the tolerance for risk from regulators. I think that all of that has changed. And because of that, economic growth is likely to be stronger going out into the future. I don't think we can grow 3% a year, but we can probably grow 2.5 instead of 2. The flip side of that is that interest rates are going to be higher. And one of the things that I'm trying to drive home to people is that interest rates are not high today. Long-term interest rates are low. They are close to the lows that we're going to see over the next 10 years. They'll get lower when we're in a recession, but they're not going to get a whole lot lower than we are right now. If you think about it in terms of a 30-year mortgage, 6%, 6.5% 30-year mortgage is a bargain. That is a bargain. We're not going to go back to 4% mortgages or 3% mortgages. They probably will not happen in our lifetimes. We will probably not see those numbers ever again. Hopefully we won't see them for another 50 years or more. So that's one of the other takeaways. And let me wrap up a little bit on Charlotte. We don't add, Charlotte is adding about 150 people a day. Now, it comes from two different components. It comes from the net number of people moving here, because people do move here and they do move away. And this is kind of an interesting number. About 160 people move to Charlotte every day, but 40 people move away from Charlotte. And so when you're driving around and somebody's got their turn signal on and they're on the wrong side of the road, they probably moved here yesterday. So, that's one of the reasons why they don't know where they're going. But the other, so that gives us a net of 120. The other 30,000 comes from more babies being born than people dying off. Charlotte's a relatively young city. A couple other things about Charlotte. Charlotte is a well-educated city. The proportion of folks who live in Charlotte that have a college degree ranks very high. It's in the top 20 in the country. It's not as high as Raleigh because Raleigh has all of the institutions of higher learning. Now, I had mentioned on the pre-call, grew up in Atlanta. A lot of people think Charlotte is going to be the next Atlanta. I don't think it's going to be the next Atlanta. It has some similarities because we're both in the South. We're both hub airport cities in the South, which is pretty significant. That's one of the reasons that so many companies want to come to Charlotte, is that we have a hub airport. But I would tell you that our hub airport is better than Atlanta's. Atlanta's is bigger. It's the biggest in the world. You can fly anywhere from Atlanta. There's a lot of good things about it. But this is what Atlanta doesn't have. I can have an Uber pick me up 1 hour before my flight departs. Now, I do have TSA, but I would hope that if you fly a lot that you would have the TSA. I mean, that only makes sense that you would have it. But 1 hour before the plane departs, it can pick me up. I can comfortably make it through security, go to the Admiral Club, get a cup of coffee, and go to my gate. And I'm not running, I'm walking. I'll never run to a plane, but I can do that. I do that all the time. You can't do that in Atlanta. You have to be dropped off at the front door 1 hour before your plane leaves. And even if you have the pre-clearance with TSA, the line is pretty long. I've even had the clear, and clear, even the clear line was long. So I like Charlotte because we still have that. And in terms of how close the airport is to downtown, airport hotels in Atlanta are not as close to the Atlanta airport as downtown Charlotte is to the Charlotte airport. And you can fly just about anywhere from here. So I don't think we're going to be the next Atlanta. I think we're going to be something different and quite frankly, something a little bit better. The other big difference between us and Atlanta is this, and that is that in Atlanta, almost all the growth is due north. It's between I-75, I-85 going north. And if you search the internet, you look at an Uber picture of the Atlanta metro area at 10 p.m., you'll see that the only lights are between I-75 and I-85 North. The rest of the city is dark. In Charlotte, we are growing about equally north and south, and we also have growth east and west. And in fact, the fastest growth in Charlotte right now is in East Charlotte and in West Charlotte and Gastonia. The reason why, in Gaston County, it's really Belmont. The reason why is that those areas are more affordable, and people are chasing affordability, and those areas are growing very, very rapidly. The last thing I'll leave you with, what's this area going to do? What's downtown going to do? Downtown's got some real challenges when you think about the North Tryon area. I speak at the City Council planning retreat quite often. And one of the things that I really drilled home, I wasn't the only one that did it, but I really drilled this home, was our need to get a medical school. And the reason why I felt we really needed to get a medical school was that we're too dependent upon the financial services industry. And the financial services industry is an industry that's going to be more challenged by AI, at least employment in the financial services industry is going to be more challenged by AI in just about any industry. And we're not growing. We're not adding jobs in the financial services industry. We're adding companies, but we're not adding jobs. There's a lot more financial services providers here, but there's not that many more jobs. And so we need another engine of growth. And it took some selling. And I'll tell you, going through the process, I nailed it exactly how it was going to happen. I said, listen, the politics are this, or we're going to have to tie it in with UNC Charlotte. But it's not going to happen. They're not going to let UNC Charlotte have a medical school. They will take us down the road, and the powers in Raleigh will say, you know what? You're just not ready for it. Let's do this in 10 years. And sure enough, that's exactly the way they did it. But we had some ideas in our back pocket. We were going to partner with some, we were looking at partnering with some schools that were overseas. And the folks at Atrium we had something in the works with Wake Forest. That's going to change things in a big way. I mean, when you think about how Brooklyn Village has had a hard time getting started, it's very close to where the medical school is. We're going to have a lot of research there, close in with the medical school. We're going to get clinical trials. We've already got some really good pharmaceutical development that's come in. That's another big engine of growth. I think it could change the development along McDowell and bring in a lot of development that could eventually tie in with CPCC, Johnson & Wales, and Johnson C. Smith. So that's, in terms of North Tryon, they're going to have to change the paradigm to get North Tryon to grow. I think the best thing that they could do is bring in more theaters. And people think I'm crazy, but New York has an affordability problem. I think that we can take some of New York's theater business from them, just like we did in the financial sector. I think we can do 3 theaters and have 3 Broadway shows running simultaneously in Charlotte. Now, people scratch their heads and they think of Charlotte, and the mayor talked about Mayberry. Get this stat, and I've checked it a dozen times. There are more people within 100 miles of Trade and Tryon Street than there are within 100 miles of downtown Atlanta. More people live within 100 miles of downtown Charlotte today than live within 100 miles of downtown Atlanta. We can do a lot more here. And a lot of those folks do come into Charlotte on the weekends. They come into Charlotte to shop at South Park. They come into Charlotte to go to concerts. And so there's a lot, I think that's what we can do there. This part of Charlotte is the part I don't worry about. This is where technology companies locate. It's where the young people want to be. It is one of the fastest growing parts of the country. And I guess one of the testaments to that, I was in Austin and I needed to get to the airport. And I was having a real hard time getting an Uber. Things were kind of busy at that particular time in Austin, and there weren't a whole lot of Ubers, not a whole lot of cabs. And I talked to the bellhop, and I said, who out here is going to the airport? And I just said, I'm just gonna beg and get into somebody's town car. I mean, that was my solution. he says, where are you trying to get back to? And I said, Charlotte. He said, man, everybody in Austin is trying to move to Charlotte. I said, I can't wait to get back to Charlotte and tell that to the economic development people.
That's great.
Just kind of an incredible story. So let me stop there.